General Continental Investments was formed in 1975 in Paris, after I'd come over for a year or two, but I think I stayed a bit longer. We've always concentrated principally in Paris, the Paris region, in offices, in office renovation in central Paris, in new developments in the greater Paris region, in La Défense, Saint-Denis, especially the opportunity to buy VEFAs from first-class developers like Bouygues and Vinci and so on, who unlike most developers in other major cities, always tended to sell rather than build out and lease, so that's good for someone buying. We always take the letting risk. We have done a number of deals with partners, and we've had support from a number of banks, especially Mr. Renaud Jézéquel and Helaba. And we've also invested in other areas of France, but really the only main area is Lyon. We tend to, depending on the deal, depending on the partnership, I think we've done about 1.6 million square meters, and with our partners have done over 2 billion in money terms. As I said, we do things in Lyon, and we have in the 90s, we did a number of deals in London. And we think they're very, what we appreciate, what we like, is Paris is a capital city. And we think there are some great opportunities here today.
Okay, great. Right. Guy-Young, we already know you, so that's fine.
Do you know what I do?
Exactly. Renaud.
Very briefly, so I run Helaba in France. Helaba is a Landesbank in Germany, as most of you would know. The size of it's related to the Sparkasse network in Germany. The size of our balance sheet is about 160 billion. Our CET1, which is very important for banks right now, is in excess of 15%. The bank is basically relatively pretty stable. The size of our commercial real estate finance book is about 36 billion in the major countries of Europe and in the US. In France, it's 3 billion, just under 3 billion. In terms of new business, we do about between 8 and 10 billion of new business every year. In France, it's just under 800 million euros of new business, and we are doing all asset classes except for hospitality and anything which has got beds in it.
I'm Alexandre Poupard. I'm in charge of the real estate investment practice at Dentons. I'm working with Véronique Lagarde, with a more focused on development schemes. We have a full-service real estate team in Paris. We cover the full spectrum of all real estate transactions. It's a team of between 15 to 20 lawyers. We have tax real estate capabilities as well. And we're working mostly for institutional investors, domestic and foreign investors as well.
Great, Tania.
Tania Bontemps, General Manager of Union Investment France. Union Investment is one of the main investment funds and asset managers in Germany. We have been operating now for over 50 years. We mainly manage financial assets, of course, but only, unfortunately, also real estate assets for about 32 billion for now. We are operating in 23 countries. We are all over the world. But mainly in Europe, so we are invested 80% in Europe and also in France. So here in France, we have quite a huge portfolio of prime assets. We are a core investor, and this portfolio is concentrated in the Parisian region and is mainly composed of offices, prime offices, shopping centers, and 2 hotels. So we have been now in France for 17 years, so we have quite a good and deep experience of the market.
Good. Can everybody hear me? Yeah. Fine. Super. Good. Renaud, maybe starting with you. We saw there from Renaud's presentation, a little bit about the macroeconomy, that you've got growth coming through in Europe. You're a lender across Europe, obviously. So what's your sense of how you see that in terms of the influence on real estate? Are you expecting, therefore, to be lending more? Do you see the market growing because of that? What's your sense of the impact of the economy?
Wow, that's a tough one. I think the outlook across Europe is quite positive. We all know that. I mean, there are obviously many risks we are all aware of. We can go back to that later. In terms of what Helaba does, we are quite busy in Germany. The market is growing quite nicely. The issue there is, as a lender, is risk. We are being pushed into higher LTV levels, and the margins and the pricing is quite high. Margins are quite low, and the pricing is quite high. In France, I see a very exciting moment right now. I think as investors, and maybe Paul or you other guys, you'd be able to comment more on that. We support, we sustain, we accompany the investors here, but we are very positive about France, and that's actually supported by my board. I was in Paris in August, and they are quite positive about the outlook for France and what they want to do here. We're in the process of growing, of hiring, not only in real estate finance, but also in corporate finance and in capital markets. And I think, France has become more strategic for the Germans. The other market across Europe, which is important, is Scandinavia. The investment market in commercial real estate is quite strong. I am not in charge of doing business in Europe and even doing cross-border transactions across Europe from Paris. But I can see through the files which go through the pre-credit committee what's going on, and it's quite overall it's very, very positive. The Americans now view our president quite positively. I mean, the Americans like to oversimplify, so they view him a bit like the Tony Blair of the late 90s or so. So there are lots of positive things coming out in Europe, and we are very keen to accompany that as a senior lender, not as a so with limited LTVs in case people are asking later.
And that's good. Tania, maybe just in terms of the union investment perspective, obviously a lot of German money there as well. Have you seen that change that Renaud is talking about in terms of the German investment capital as well, beginning to look more positively on France? I mean, there's been a lot of investment capital going to London, interestingly, from Germany. But
yeah, that's true. Well, I started to work with the company in 2011, and my German shareholders promised me a lot of development at the time and investments, and actually we start to sell the portfolio. So we sold for almost 1.5 billion in 2 or 3 years. So I was quite a little bit disappointed from this development, going downwards. And now this political change has been so incredible. 1 year ago, all the signs for France are green. Everybody is optimistic again. Everybody is confident about France's economy, about the politics. So it seems that now things will be much easier for us to convince our boards to invest in France. But for me, the French market was always running very well. I mean, we always had low vacancy. We never had oversupply. We didn't have any bullish rents in the market, and it's just the political signs, of course, also the economical perspective. But the French market was always very sane and a very not speculative market. But of course, now also I'm taking benefit of this optimism, of this euphoria of our German shareholders that really want to be strong again in France, and of course also in UK again. We had a break after Brexit for 1 year. We didn't do anything in UK, and just now in the last 6 months we invested again for a couple of 100 millions. So UK market is again attractive for us. But I must say that thanks to Brexit and Donald Trump, I have had a lot of investments here in France in the past 2 years. So it's I hope that this great time window will just continue, and that Macron will do his job and still reassure Europe that he's business oriented, that he's doing the reforms, and if this goes well, it will be great for France. The next 2 or 3 years will be just incredible, I think, in terms of market investment, occupier market. So I'm just quite positive.
Okay, good. And Alexandre, in terms of what you're seeing, let's dig a little bit into the political risk. I'm going to come in a minute to where we think we are in the cycle. There's been a lot of discussions over the past really year, 18 months about risks in the market, political risk especially. That seems to have died away a little bit in terms of concerns about how it affects the markets, but are there anything that you're particularly thinking about for 2018 that you think these are potential risks, whether that's interest rates, whether that's politics? What's going to keep you awake at night?
Actually, I'm not sure that we can say today that political risk will be less high in 2018. When you look at North Korea situation, it's pretty scary, and Korean have been quite active in the real estate investment in France. So North Korea situation is pretty scary. You have the situation as well in Middle East. The embargo, the rivalry between Saudi Arabia and Iran, with the resulting embargo towards Qatar is a real issue, because both Qatari and Abu Dhabi investors are key and significant real estate investors in France as well. So this is an issue. We have Brexit. Apparently they're making progress. They should have apparently agreed upon the bill for the UK for the Brexit, but there's still many uncertainties regarding the outcome of the negotiation related to Brexit. And we have Spain as well, Catalonia. Catalonia is potentially could be potentially a major crisis for Europe, especially within the context of Brexit. So just maybe to get back to the Macron effect, we're really seeing that and hear that from our clients as well. For us, it has been a game changer. It has changed the perception and the image of the country towards investors. There are much less French bashing when you meet with foreign investors. Some of them are even reconsidering their view about France. So there is a very good momentum for France. And so far, let's be optimistic, they are doing the job. They've been able to implement a substantial reform of employment law, in France. It's a substantial one. It's more than what has been done during the last 20 years. So in 6 months' time, it's a very good result. So let's be optimistic about that. Still, for me, 2018, we will still be, under the threat of political risk, and maybe also overheating of the financial market in the US, in particular.
Okay, good. I mean, just coming to you, Guillaume, since you are Korean, and we're in Korea recently, how's the risk perceived there? I mean, it's...
well, from Asia, what I say is a lot of demand and appetite for France. They're cautious about UK, certainly, so they're shifting their allocation towards a bigger allocation to France now. Also, what was interesting is they're not willing to pay the 3 or 4% prime yields, so they're looking for growth potential. Despite this environment, certainly stable political environment is helping, but they want to understand, to dig further in terms of risk-adjusted return. They want to have really local knowledge about if they're going to Paris, is it everything about Paris, or are there certain sub-areas to look at more actively? If they want to reach a 5% hurdle rate in terms of yield pricing, can they do that in Paris? Or is it a matter of just having the income and not the IRR? So it's always a trade-off. So they're much more informed, I would say. They are in demand for Paris. They do. I've seen a couple of new investors potentially opening their allocation towards European real estate, so which is very good, France in particular. But they don't want it just to do it, just to go there. They really want to understand what their performance will be.
Okay, good. And Paul, you've You've obviously got, having come originally from London and still retaining a place in London. How are you seeing Brexit? Obviously, we mentioned earlier, Guillaume mentioned that the European Banking Agency has moved here to Paris, which is maybe 200 jobs, but is kind of 40,000 hotel nights a year, for example. Are you already seeing real effects of Brexit before it actually happens, particularly in the French market?
No, I don't think so. I don't think so. There's been some talk. What seems to be in the press generally is that companies coming from London, well, I don't know, we'll go to Luxembourg, we'll go to Holland, we'll go to Frankfurt, and a bit worried about France. I don't know why, because of I don't know, maybe high taxes, maybe employment structures and so on. So Paris hasn't been on in my view, in the top list. But in the last few weeks, that's changed a little bit. First of all, I think the French government are trying to do quite a lot about it. And secondly, you've had this decision by the company to come here. Second and thirdly, I was quite impressed by the president of Goldman Sachs, one of our partners, who said we were supposed to be going to Frankfurt, and he said last week, well, we're not only going to Frankfurt, we're also going to Paris. And there now seems to be growing, just beginning to grow, Paris is becoming possibly more of the right place for a number of cities. It is all, after all, it's only a 2-hour train drive. So I think it's becoming more important, but it hasn't really happened yet.
Okay, but you're seeing a gradual momentum, really, I suppose.
I think just in the last few weeks, actually. Yeah.
I agree with Paul that nothing happened for 1 year, and now 2 weeks ago movements started. Bank of America took a 10,000 square meter Rue de la Boétie, and I'm losing a tenant because they were in my portfolio. So I see the first effects of Brexit. And HSBC also, I think, are looking for moving some stuff from London to Paris. And what I heard is that actually Brexit becomes effective in March 2019. So companies will have to start taking decisions beginning of next year at the latest, because if they want to prepare the moves and all the papers, regulation, administrative stuff, they cannot wait, until the end of the negotiations. So I think things are just starting to move, and I'm having also some brokers asking, looking for space. So everybody is prepared to welcome some London banking people in Paris. What I don't think is really working well is the politics, because we have so many layers in politics. There's also our mayor of Paris, then there is the region, then there is the town of Lille. Everybody's trying to make lobby, but there's no organization, and it's a typical political French thing that instead of having a small group, making lobbying, we have little peaks, little groups of people moving around, but it's not very coordinated. But I hope that at the end the message is passing over, and I think Paris is prepared to welcome all these banking people in a quite coordinated and professional manner. I hope so, at least.
And there have been some measures which have been adopted by the French government to facilitate, the expatriation of high finance paid job. They have tax cuts for 8 years. There's a specific regime which has been adopted. It's a good thing. They're going to boost the creation of international school as well. They've been modifying the way when a bank will lay off an employee, the severance pay will be calculated on the basis of the fixed salary of the employee, which take out the bonuses, which are very important in the finance industry. So they are trying to capitalize on that trend and they fully understand that it's very important for Paris to be able to attract those kind of profiles, just to boost the image of Paris as a financial center. We will not replace the city, but we are still so much behind Frankfurt and even the city that we really need those financial institutions and bankers and finance jobs coming to Paris.
Renaud, I just wanted to pick up one thing with you that's not really been a theme for a little while, because it's been that interest rates have been low and have been going down or staying down. Interest rates have ticked up in the States, starting to tick up a bit in the UK. Do you think there's any chance of that happening in continental Europe, France? And do you think that will have an impact potentially? How do you see that, and would that make any change of strategy for you as a bank?
Yes, of course. I think the outlook for rates is a gradual increase, but relatively slow. I think we are in a very stable environment, quite controlled by the central banks. So putting aside any exceptional crisis like Alexander mentioned, I think we're going to remain quite in a stable interest rate environment. As a lender looking into what our investors do, our asset managers do, I think the key issue is arbitrating or making a view on rental growth versus yield shift, which drives then our ability as lenders, senior lenders, to lend, where do we put the level of LTV, and whether we focus on value rather than cash flow. Like we are saying, I think the outlook are positive for France. It's just a question of not overdoing it. The issues are that I think we all know that the prices or the values are quite high, whether you're talking about real estate, you're talking about shares, you're talking about bonds. I mean, look at PE levels, look at the volume of M&A activity in the world, especially in Europe. I mean, we all know that we are kind of a top of the cycle. The question is of a cycle. The question is, well, does it keep on going for a while, or will it be adjusted relatively smoothly? There are many, many indicators which hint that we have to be very, very careful. But overall, I think, like Paul is saying as well, I mean, the business in France has been starting to look good, and we have. And it's a bit easy to be a lender rather than investor, because we're always sitting behind the investor. I mean, at the end of the day, the investor takes the risk, and we take a risk as well, but it's a different risk. So I'm not sure I'm answering well your question, but we're quite positive.
Okay, good. And just one thing to pick up on that is we've obviously seen a rise in loans and values have stayed relatively calm.
In France, yeah. Yeah.
But as pricing increases, is that where the danger could come from? That, you know, if there's a sudden crash in pricing, then those loan to values don't look so healthy.
Yeah, sure. On the core assets, the plain vanilla transaction, the banks will be at 50% loan to value, and the prices or the margins or the interest rates will actually keep on going down. I mean, as a lender, you may not like it, but that's basically the issue. And so I think we're at the bottom, but I've actually been saying that for more than a year now, so I've been wrong. On the more risky type of deals, where I think people should really focus on development deals, on VEFA deals, on value-add type of deals, the margins are richer, obviously, but as well, you see them coming under pressure. And it's all because of the reasons we all know, you know, the weight of money, etc. So the way the lender is trying to, and the market is overheated. There's a lot of competition. The lending market is very fragmented, so it's very tough to stay alive in the market. So the way we do it is try to mitigate risk as much as possible by sticking on our LTVs, our covenants, and the maturity on our debt. You are going to see less and less debt of long-term dated. In fact, our French book is less than 5 years average term. It's actually less than 4. We are doing long-term loans as well, close to 10, but we do it in very rare cases. So going forward, I'd love to see the margins going up gradually, but as long as it helps also the investment market. I mean, it's we are there to support the market. It's our interest to help the business going. I know that for Paul, I'm always too expensive, but as a lender.
Guy-Young, let's just pick up the point. I think that Renaud was also making there about where we are in the cycle. From the slide you had, it looks as though, I mean, the discussion in Germany, part of it was that the presentation involved a picture of a party and deciding how long that party might go on, and was anybody ready for a real hangover at the end of it. Where do you think we are? Are we still at the party? Should we be heading towards off the dance floor towards getting our coats? Where do you think we are?
Very difficult to say. I think that there is still room for us to do something. We certainly at Invesco believe that there is still another 2 years, to do and execute value-add strategies, which mean that we believe that the pricing will still remain high, depending on the market. So France today benefits from a very good momentum. Now the risk is really because of the very low yield pricing is to take more debt, and that we are very careful because the debt impact can be very positive. You're just buying at 3 and can go up to 4% income return. So we're trying to still control our loan to value. We are also doing in some parts in Europe when the debt financing is not as available as in France, such as in Italy or in Madrid, and we're performing value-add strategies. We're also trying to do full equity. So we're trying to manage those risks, but I think that over the next 2 years still, we're still partying, if that's the right term. There is really a good momentum, but also not only just Europe and looking at Europe, globally speaking, in comparison to Asia and US, Europe is really in a good momentum.
Okay, good. And Paul, you've obviously seen a number of cycles. Where do you think we are at the moment? And are you still optimistic in terms of, I guess, some of the fundamentals in the market, like the occupation? I mean, we saw in Guy-Young's there that unemployment is coming down, that the availability of space is less. That some of those key fundamentals seem to indicate that the current cycle can go on for a little while.
Yes. Well, yes, I think so, and I think more than that. I think that we are now really at the beginning of a major opportunity. The French market, basically we're talking about rents and yields. Well, over the last few years, Paris has the lowest yields, I believe, in Europe. And that's been a fact. So there's one thing about the present situation. There are people, whether they're funds or whether they're, there are people who are a bit worried that yields could go up in the next 2, 3, 4, 5, 6 years, whatever it is. There's a certain worry about if you're buying and selling. But I believe that the market, where we are in the market, is actually a great opportunity today. Paris, I repeat, is a capital city, and there are only 2 in Europe, really. It's a capital city with its more of a manufacturing base. The rents over the last 5 or 6 years or 7 years have been wobbly, difficult to generalize because there are areas and areas, but they certainly haven't really gone up. And we've seen, say, in London, rents have gone up, shot up by what, 100%? In Germany, rents have gone up. But in Paris they haven't. And I think we're right at the beginning. It's already started a movement in rents. And I believe that movement in rents, personally, I believe it will be quite high. As it happened in one or two other occasions, only once or twice over the years. So I think there's an enormous opportunity. I think the supply, first of all, the supply is more limited, beginning to be more limited. And secondly, well, maybe a bit of Brexit, but I wouldn't rely on that, but that will help a bit. So I see enormous opportunity for rental growth, which has not happened for years. So, and I think that could also go hand in hand with, as you mentioned, Macron, the government is pro-business. That helps. But also, if there is, if interest rates do go up or so, Paris, I'm talking about the letting market, has certain benefits. One thing is the indexation. For instance, the annual rents, if you're signing a 12-year lease or something, 9-year lease, you're getting annual indexation, which actually helps a lot. There's also a lot going on in Paris, Grand Paris. Unlike most cities in the world, like Toronto, Chicago, London or something, people move to the suburbs, and then younger people wanted to live and work in the center, so towers were built. Obviously, that had not happened in Paris because of the height restrictions. So there's going to be an enormous amount of building regarding Grand Paris, and that'll be linking also to the Olympic Games in Saint-Denis. So one of the things I also think is that the building costs also going to rise because there's, the building company are so busy. So I see it, as a very, very good time to invest in this market.
Okay, good. Very positive view. Let's just pick up a couple of detailed things out of what you've spoken about there. Maybe with you, Guillaume, in terms of the supply side, we've had a question come in. Thank you, Fiona, for that. Which is, in terms of La Défense specifically, are there concerns with the supply side there? Does anybody want to pick that up, Guillaume?
Well, I can. We Invesco are quite positive about La Défense. We've invested in 2013, 2014. We bought when nobody was buying, so we bought at a very attractive yield pricing of 6+. And now yields are moved down to 4% today. In terms of new supply, what we tend to do is we're continuing to look at La Défense. There's still a very sustainable yield gap with the Paris CBD, and obviously what we have seen since the peak in the new supply risk, which was in 2013 actually, we've seen a very good absorption of the office space, and certainly for occupiers looking for large grade A floor plates, this is where to be as an alternative, the best alternative to the CBD, so not that concerned about it.
Okay, good. And Renaud, in terms of what Paul's talking about there, which is essentially potentially quite a lot of development in terms of Grand Paris, how much of that is being financed? Is it being financed by banks such as yourselves, or what's happening in terms of the development finance, I suppose?
Yeah, in the finance market, there are about 15 banks who cover the market. On the development financing segment, there are quite a few, much fewer, or much less. We are one of them. The main players are the major French and a few German. I'm not missing anyone. I don't see the American banks or the British banks doing that so much. They are more on the large tickets, value add or investment financing type of this. Yes, the key players, the key lenders are keen on development financing for the reasons which Paul and Tania as well mentioned. we are very focused on the location, the accessibility, the infrastructure around the assets. I mean, exactly like the investor is, because all that determines the leasing risk. And we are very dependent and focused on the quality and the track record of the asset manager as well, who is taking over that project. So we have been quite, selectively supportive of a few transactions in the past year. We want to do more. It's actually interesting, the history of our book. Like I said, we have about just under 3 billion of assets. In terms of the new business every year, I have a segmentation by product, and you see that the spec component of it is increasing quite dramatically, has been increasing quite dramatically over the past 2 years. And I expect it to be to keep doing that. I mean, obviously, we are not going to keep on taking just pure development financing risk. We have got to mitigate our risk with more core type of financing assets. We're also quite well positioned on CBD type of assets or things like that. But so I think all the banks are keen to support the development effort of the investors. And then, having said that, for example, we finance quite a few large transactions in La Défense. Having said that, us, like also the other main French players, they tend to sell down their exposure within the network, so that they can keep on financing new projects going forward. I mentioned La Défense, but that's also the case for south of Paris. Even further west, Boucle west of Paris, even in the Saint-Denis area. So.
Okay, good. Did you want to pick that up?
No, I just wanted to mention one thing. When I talk about the Grand Paris building, I'm also not only necessarily talking about the real estate or necessarily office buildings. There'll be quite a lot of residential, but also there'll be stations being built and to allow people to come in quicker and out of the. So this is also part of the building activity. And on the other hand, about La Défense, I think that will go on being a very strong market. It has all the elements to be so, so I see La Défense as being, well, that's the one area where you can build, towers, and people, I think, will be regrouping there. And there'll be certain also examples like Duo, the towers Duo, and the 14th arrondissement, or Natix will be moving to, at 90,000 square meters. So this sort of thing will also be happening.
Just to pick up on what you said, is it's good to hear that actually the French market is driven by French banks, by French investors, a lot of French users and tenants. So this is a safe haven actually, because that helps to avoid volatility. I mean, in London we have Asian investors most of the time. In Germany, over 50% of the capital flow comes also from abroad. So international investors. And here in France, we have the chance to have around 70% of French investors. We have French banks also backing up, and French users a lot also. Finally, big companies who consolidate the occupier market. So this is a great, I would say, advantage compared to other markets. It makes it much less volatile, and I think this is an important point also for my German shareholders who want to have like safe incomes and sustainability, growth, and this kind of thing. So it's a point that has, I think, to be pointed out.
And are you, Tony, just in terms of the Grand Paris, is that an area that your investors are keen to go in outside of the main centre of Paris? Is that something that your investors would buy into?
Not really, because we are a core investor and we look center of Paris, but I would say in Saint-Denis there are many opportunities now, and it will be the main hub for the Olympic Games and the Olympic housing and all the village, I would say. And there will be thousands of residential flats, of square meters and equipment that will be built. So it's a great opportunity, but it will not be our, in terms of geography, it will not be our privileged, I would say, objective to invest in the periphery. I would say we will stay a center Paris player.
Yeah, on that, we've been working on several transactions near Saint-Denis, Clichy, for value add, mostly for value add funds, private equity real estate value add funds. Clearly, the bet is that the play, actually by the investor, is to say that with the Grand Paris Express, with the Olympic Games, it's going to accelerate the urban regeneration of the north of Paris, and in particular Saint-Denis, because Saint-Denis will have the main train station of the Grand Paris Express. So that's the play of those value-add investors for this area of Paris.
Interestingly, when we were in China a year ago, one of the big things that investors were looking for there, and Stephen, you were there, weren't you, Dee? One of the big things that investors were looking for were infrastructure projects linked to growth in a particular area. So, I mean, Guillaume, do you think that this infrastructure that then Paul is talking about, where you've got new stations arriving, you've got that potential, that is going to be something that Chinese investors, Asian investors particularly will be looking at? Is that your sense when you're looking at the types of capital? Because I think you've got a new residential fund.
Metro access, yes, clearly we're looking at it. In the office segment, we've been very active in Milan, but it was within the city. So it's nothing outside in the second periphery. So whenever there was a new metro line, we were moving up the risk curve. So we were doing refurbishment, repositioning, new developments. For the French perspective, we're not getting any. It was already in the 17th district. So for the Grand Paris, for instance, with the metro access and new infrastructure development, I would say it more from a resi view, mixed use, as I was saying about this work, life, and play, but really mixed use, retail, resi mainly. So not from an office view. From an office view, and really from talking to international Asian investors, but also pan-European, we will be continuing to focus on the central locations within the city.
Okay, can I add just a few points, because we are giving a very positive view on the environment and the outlook. But one thing in relation also to infrastructure is leverage. I mean, let's not forget one of the key issues is leverage of our sovereign debt, and that's across the board. So if something bad happens in particular geopolitical or whatever, I mean, that's going to be, it will have a mega impact with a domino effect on many sectors. So over leverage of the public sector, even of the retail sector, of private individuals and of companies. Debt is cheap, but in some cases, outside real estate, I would say, because I have the impression commercial real estate has learned its lessons, at least on the senior lending side. Leverage is high. And second, in relation to yield shift, value, adjustment, etc., I agree with everything which has been said, but if you look at government yields, for example, if you look at the German Bund 5-year forward, I mean, you see that the 10-year forward 2 years, you see that it's expected to increase by 30 bips. That's on government bonds. So on real estate yields, that will have a multiplication factor impact. And in relation to your question for political risk versus or stability of France versus Germany, for example, historically, spread between government bonds, 10-year bonds, and 10-year French OAT has been, when I was much younger, was like 80 bips. Now we are more like at 35, 40 bips. And over the recent days, it has actually keep on getting squeezed, which goes towards the current mood, at least in France, that France is getting more stable. So there are lots of uncertainty, obviously, but people should not really forget the over leverage issue question.
Okay, good, thank you. I want to dig a little bit into some of the sectors now. So maybe Tania, with you, just in terms of the sectors that you're keen on at the moment? How do you see those? Are some of those a macro trend that overall you're seeing retail as a positive one or something, or are they more related specifically to the French market? Which kind of sectors do you think might outperform this year?
Well, here in France, we are mainly an office investor. We have very few retail and some hotels, but maybe on the global perspective of the group, what I can say is that we are focusing a lot on hotels because it's a long-term secured investment, and we have also an expertise in this field. So we are buying hotels also now in the US and all over Europe. So this will be a major focus, and there are still some 100 to 150 bips to gain on yield. So it's a good long-term investment. Concerning the retail, we have to be very cautious. We have some very big dominant shopping centers in Europe which are performing extremely well. These are major shopping centers. I mean, like we can see here, Quatre-Temps and in La Défense. So these ones are performing well, and there are few opportunities, of course, to buy more of those. But on the other side, on retail, we are quite cautious now because, of course, street retail has become extremely expensive, and there's an enormous pressure on yields. And also what we see, the negotiations with retailers are more and more complex, and we see the big brands like H&M, Zara, and so on putting a lot of pressure on us. When we negotiate the leases, they sometimes don't want to pay any fixed rent anymore. So they pick the spots where they want to be. So retail is a thing that has to be run by specialists. So we have a special team with a long year expertise and knowledge in Germany. So we will still continue to invest in shopping centers and galleries and street retail, but you have to be very selective and very careful because you cannot just improvise. So it's a very specific sector, I would say, much more complicated than offices. And also the new thing for Union Investment is that we raised funds to develop a residential fund. We raised 600 million euros recently to invest in residential in Germany, and we also took a participation in a big property company in Germany. So now we are owning a couple of thousands of flats across all over the big cities in Germany, and maybe the idea is also to invest in the Netherlands and in France in residential. So this is totally new. We need to diversify in terms of asset class, in terms of geography. So since we are already in offices, retail, logistics, and hotels, we will open up now our focus also on residential and maybe student housing. So this is something quite new. So we'll see how things will develop on these terms.
Interesting, and that picks up also the point in Guy-Young's research actually as well, that move more towards some of those alternative sectors or maybe closer to some of the US models in some ways. Alexandre, since you're acting on the kind of corporate side as well, a lot of activity this year, especially with companies taking over other companies. I'm thinking especially of, or investors taking over other companies. So corporate vehicles, especially things like P3, Logicor in asset, and recently also Patrizia and Triuva in the residential sector. What's your sense of how that market might develop next year? Do you see more corporate level transactions, whether that's to do with I guess consolidation in the market or a different way of accessing assets? What's your sense of it?
But there's two ways. There are the consolidation transactions, which are M&A linked because usually it's a tender offer. One of the biggest transactions was clearly the tender offer of Gecina upon Eurosic. which was one of the major transactions of this year, which followed another, battle regarding tender offer, because the previous year in 2016, Gecina and Eurosic were fighting for Foncière de Paris. So it was a surprise for the market in July that Gecina announced an amicable tender offer upon Eurosic, and the whole idea behind that is to build the largest office French REIT, or maybe even European REIT, dedicated to offices. So it was a way to accelerate the strategy, their growth strategy. You've seen also ICAD making a tender offer on ANF Immobilier. So you have consolidation transaction. We hear also from our investors, which have an issue in terms of pricing for certain assets, that they are willing. They have substantial amount of cash to invest, that they're willing to consider what we call complex legal transaction, meaning that, for instance, a deal like Northwood did on Générale, a tender offer upon a SIC, in order to acquire, a portfolio of assets, or 22 partners on Dublin. So that's a kind of transaction. Will there be further consolidation in the market? I don't know. Probably, it's usually the case. What we will see maybe in 2018 will be privatization, because it has already been announced that, for instance, the CDC, which is the holding company of the French government, will sell its stake in ICAD, and as well Compagnie des Alpes. So this will bolster the market. And after we also from clients that they may be interested in acquiring business, real estate business generating income. So again, it's a little bit like Tania. They're trying to diversify basically, and finding ways to invest their funds. So M&A / real estate works, a transaction may be an issue, maybe a solution for them.
Okay, good. Renaud, in terms of obviously in the US, you've got large REITs who are in healthcare, are in student housing, are in multifamily residential. Less so here, but interesting that both Guy-Young is talking about Invesco potentially looking at a pan-European residential strategy. Tania here with Union looking potentially at student housing, residential. What's your sense of that? From a banking perspective, do you see that as something before that's a sign that the market is getting too frothy? That these alternative assets, what would have been viewed as alternatives, are now only coming into play because it's difficult to access opportunities elsewhere? Or do you think it's more of a move towards actually these becoming a more mature market and maybe somewhere where if you're not lending now, you would lend?
Obviously, investors are looking into alternative assets because they are not getting the returns in the traditional assets. But I think it's more complex than that, because we are really going through a major revolution here through the digitalization of the world and a Uberization of usage of anything we use. Real estate is one of it. I mean, obviously there are taxis, there are other things, food, etc. But I think real estate is also going to be majorly impacted by digitalization and the fact that the users may want to variabilize the use of their real estate. And here there are bridges between pure office and hospitality. Because in an office, or you tend to sign a long-term lease, but we're already seeing that people are moving into a co-working type of environment. It's not going to be a dominant factor, but it's going to be an influential factor in the office real estate market. That digitalization is also impacting the retail world, the logistics world. Look, there are lots of retailers right now who are outsourcing their real estate. In France, we have news about Galeries Lafayette and a few others moving into a franchise type of model. So there are a lot of interesting things going on, at least in France, but I'm pretty sure it's the same in the US, even more so in the US and the UK, and ultimately in the other countries in Europe. So, and all these trends are going to drive significant value creation. And so for the smart investors, there is value to grab. And the smart lender, you want to go with the smart investor. Whether that's pan-European or not, I think we should focus first on each domestic market. It's very complicated to do stuff on a pan-European basis. I've done it in prior lives, in different type of industries, but the jurisdictions are different, etc. So, but the overall trend is, yes, there are people are moving into alternative assets because they are not getting the returns they want, and also I think there is a more fundamental smart analysis of the commercial real estate market, with bridges going from the more traditional real estate market into the alternative type of real estate. I haven't even talked about PropTech yet, but here we go. I will stop here. And I'm sure, Paul, you have interesting views on that. Just what I said. What, as a major VEFA player, yeah, what do you think of alternative sector?
Well, yeah, obviously there are things to be done. I mean, we developed an office tower in Beaugrenelle, which is near the Eiffel Tower, and during the construction we had several approaches from hotel groups for that tower. What we already had a planning permission, so we went ahead in offices. But yes, we can see different uses. You know, for example, Saint-Denis, which is going to be a major, already is a major market. It's going to even be more of a major market. One tower there, you know, which is an office tower, which has not been very successful, that could be converted into a hotel. So you're going to see different things like this. And as Renaud mentioned, you know, student housing and, you know, other areas, and residential, you know, are no doubt all interesting markets. But I still think that retail, of course, that's the reason I came to point, retail, of course, but I still think the most interesting market and the best market and the largest market is it's the office market, but the office market is changing. How the buildings, what sort of space tenants want, as Renaud mentioned, and that's changing a lot. And I think Paris is possibly leading Europe in that respect, because I think the change there and how people use office, co-working and facilities and so on, I think is more important here than possibly, say, in London. So that is also a very important point for users. And the other point, of course, about the Paris market is the transportation. You know, it's got probably one of the finest infrastructures in the world. And the key thing is the RER lines, you know, which will have a major impact where people go. And that is one of the best in the world. See if I've answered your question, I don't know.
Good. And actually there was a question also from the audience from tomorrow that was about exactly that, the flexible office arrangements. And when you're developing office, are you developing it with an idea of fewer square meters per person? How does when you're talking about the way that maybe modern usage of the office and the occupier demand is different, does that mean anything in terms of smaller space per person, or just different communal rooms, or what are people wanting? Or is it the flexibility that I suppose that Guy-Young was mentioning?
I think it is the flexibility, but what we are incorporating in, especially in the new developments that we are incorporating services, which is very important for tenants, whether the services are you know, additional meeting rooms, whether they're cafeterias, cafes, fitness, conciergeries. I think it's very important that the buildings today respond to this, because this is really what people are looking for. So we try and add the maximum of services into our new developments. Yes, certainly.
Okay, good. And Guy-Young, were there any other, from an Invesco point of view, any other sectors particularly that you wanted to highlight in addition to the ones Tania had mentioned?
No, really. I think it's too early for us to move to student housing. We Invesco, we want to do something what we know how to do, so we don't have that expertise. When we started our allocation to Resi in UK was 3 years ago, and we hired someone who had a very strong track record and were very skilled in that. Hotel is really, we do have some 11 years of historic experience. We know how to deliver the performance. We have a whole team dedicated to it, so we know how to do. So that's where we will be focusing. But we're not trying to diversify into areas where we don't have the expertise in place. So, not in.
Do you see, just from your chart where you had the e-commerce part of it really going up at quite a steep angle, does that mean that there should be therefore within Paris more inner city logistics? Do you see that coming in? I mean, I'm not sure where we are in Paris with same day delivery, things like that. Is that happening in Paris at the moment?
Yeah. Amazon Premium. I use it every day, particularly Christmas, but we do have. I think that it's very interesting because we're talking about the main dominant actor, Amazon, but we're not talking about specific hubs. When you see how they develop, in Italy they do have a plan of developing some 19 platforms over the next 3 to 5 years, and this is all spread out across the region. So this is not just talking about the specific hubs. They want to be everywhere so they can deliver very fast. The last mile logistics is certainly something we are focusing at, the cross-dock as well. So logistics is really something that we will be investing more this year.
And there was a long discussion actually about in Frankfurt about self-driving cars, what would happen with that in terms of parking availability spaces, whether or not then you've got room for that. I'm always intrigued, and having driven through Paris again in a taxi recently, whether or not it would just be too boring for Parisians to have very, very safe automatic driving cars. But do you think there's going to be any major kind of technological things, and then I'll wrap up?
Yeah, I think so. Yeah. No, I'm going to say today in the market in Paris, there's a big problem. The traffic is very, very bad, and that is, forcing 1 or 2 people actually to go to areas where there's no traffic, if they can find it. Maybe somewhere like Laval or so on, and further out. But that is a factor at the moment. How long that will last, I don't know. But the traffic is really very bad.
Yeah, that's a very good, for me, that as a lender to office, it's a very good question and pregnant question, because we always, especially when you look at offices within Paris or close to the periphery, we always wonder the ability to park your car. I don't have a car, I never had. I always use public transportation or rented one. I'm actually against car ownership. Not for environmental reasons, so it's just that I don't think, like Paul said, it's just too much traffic, at least in cities. And so, as an investor, I think you want to ask yourselves, do I really need a parking space? And if I want to move my staff, say you have a 30,000 square meter office in the area of Paris, I need to put myself in the shoes of the staff. And do they want to use their car? And if they can't, do they have alternative? And I think you want to really pay attention to the infrastructure around it, the metro, the RER, etc. And these are factors you cannot control for obvious reasons. So, and that's very different from Germany, because in Germany people use their car. They're very, very proud of using their car, going to the office in Frankfurt or wherever, Dortmund. But in France, it's more like a question of, I think, I don't want to use the public transportation because it smells, and I would rather be stuck in the cars. And I think there's a mentality to change.
Yeah. So when I say the traffic is bad, this comes really from the mayor of Paris, who's closed certain roads, along the canal and so on, and which is forcing people into these traffic jams. But that's mainly a political situation.
And my special guest is the mayor of Paris. Good. I mean, very interesting, the potential, I think, for what happens with that then, because you've already mentioned there, Paul, that you've got already other assets, other sectors really competing with office directly, so whether that's hotel, whether it's residential, mixed use. I think one of the things that has come through increasingly in these discussions is mixed use being much more of a theme generally. And if you can move some of the parking spaces out of shopping centres. That creates the ability to be able to suddenly grow the size of a shopping centre. So interesting discussion points. Has anybody got any questions? I've got one last question, but has anybody got anything that they wanted to bring up? Last question then. This is to everybody, which is to give everybody a sense of something to take away in terms of investment. Where should everybody invest? You can stay in France, or you can be you can be pan-European if you like. But where would you invest? You can either decide to take a very corporate view or a personal view on it. Your decision. Tania, let's start with you. Where should everybody invest their money in 2018?
Well, if I'm rational, my German side says that you should invest in Germany because there is still rental growth. And maybe there are some scopes to do in Berlin and Hamburg and Frankfurt. My heart says invest in Paris because that's where my business is, that's where my team is, and that's where I need to make my performance. But it's not irrational, actually. It's very rational. But Paris really, and also the regions. We didn't talk about the regions. It makes really sense, and especially in the next 4 or 5 years, nobody knows what is going to happen next elections. Maybe Marine Le Pen or, I don't know, Mélenchon, or we'll see. So let's take the advantage of having Macron on top of the nation, and let's invest now.
Okay, Paris, but also a regional approach. Okay, good.
Well, I'm just a lawyer, not an investor, and I'm French, so not objective at all. So I would say definitely France. Even though we've been working the past year on outbound transaction for French investors. So continental Europe, the two key markets are clearly Germany and France.
Okay.
Well, I think it all depends on your investment strategy and whether you're looking for core value add or spec or opportunity. So what type of returns you want. And I think in France you have the choice. You can position yourself anywhere. I wouldn't underestimate the potential of Lyon, of Bordeaux, Marseille, Strasbourg, Lille?
Well, Paris, we'll be increasing our allocation to Paris, that's for sure. We will be very active in the logistics. We will be as well increasing our allocation to Spain. UK is something we continue to monitor because despite this very near-term bump, we believe that on a longer term there is value growth potential. My heart, which is not in Invesco Corporate, it's been already a couple of years, but I think that Lisbon market is really something we could be looking at. So maybe not for the traditional mainstream sectors, but really in terms of hotels, high street retail, and resi.
The Lisbon market. Okay, all right.
Well, our main activity will continue to be in Paris. And when I talk about Paris, of course, it's the overall region of Paris. You know, I come back because it's a major capital city. We could have possible interest in other areas in France, but they tend to be small cities. We personally like Lyon and so on, but they are small cities, and Paris is a major city. We also could have an interest in London coming up. And but I do agree with something that Tania mentioned, that 70% or 75% of investment in France actually is French. And that's something that needs to, or could change, or is a factor. Okay?
Okay.
Thank you.
Okay.